Hello, everyone. It's 8 a.m. Chicago time on the 5th of June, 2018. It's Tuesday. Thanks for joining me again for another Trader Bite. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The market stance this morning, again, looks just the same as yesterday, except that we have dropped a little bit. This morning we were actually higher earlier on. One thing to note, there's a lot coming across the wire. Tweets and Secretary Kudlow and just a lot going on with this trade balance stuff. So that seems to be driving a little bit some of these small bursts and trends like we saw just after 7 o'clock. Has to do with NAFTA. So it's the jitters again. Other than that, we're seeing crude also push lows, lower lows in crude. It's the lowest low in 2 months. And, it's another day, another summer day. Let's take a look at what we expected yesterday. The primary scenario from yesterday was an expectation of an open auction, a test down, leaving the gap open, and then a burst through the overnight high. Excuse me 1 second. Sorry, I've got a sneeze that just won't come out. I apologize. And then the expectation was for the push to 2754. What horrible timing for this. Yesterday, all it did was it went through the gap. I won't cover scenario two. Scenario one. Well, actually, let's cover it. Scenario 1 and 2 were very difficult to trade. Yesterday, I did not find a trade. We had an open test drive, and then went completely sideways. And we had a very unusual statistic play out yesterday. It's in the cards, and it happened to pop up yesterday. But yesterday, I couldn't tell if it was scenario 2 with an open test drive. We see that in scenario 2. We get to 2752, close the gap, and then sell off from there. That didn't happen either. Ooh, man, I'm battling this. Here's what actually happened. So there's the open. There it is. There's the open. There's the test. We tested towards the prior day's range. We left a gap open, which I forgot to mark this morning on the master levels. We left the gap open, and there's a drive. Once the drive was done, the IB was put in. We have a double IB high. This is a legit double IB high. It's early in the day, though. So given the open test drive, double IB high, my view was bullish, was the continuation to 2754 to touch the MC point of control, and it dropped through the mid. Oh, jeez. It dropped through the mid, and it just went completely sideways. We have a local double bottom, a local double bottom. And for the rest of the session, it's completely sideways. The thing that I caught on the close was the fact that we were trading in a zipper in here, but Delta started rising. So I looked for the long there. Danke. I looked for the long there, and it just didn't go anywhere. It popped up, came right back. It's not worth the risk. So yesterday, very poor day overall for me. Trading day. Look, as I said before, I would be lying if I came in here and I said every single day is a big day. Every single day is a $15,000, $20,000 day. It's amazing. You know, come join me. Sit by my side. That's nonsense. There are days where it's rare. There are days where I just don't find a trade. That's the wrong way to state it. The trade does not appear to me. Remember, it's like a wave. We're waiting for the right wave to surf. We're waiting for the wave that's going to give us the best ride for our effort. We're not trying to make waves. When I say find a trade, it sounds like I'm out there looking and trying to make a trade happen, and that's not the right attitude. A lot of people do that, and you end up over trading. But yesterday, it did not break the initial balance. The historical probability of that over 2,500 days, something like that, is 1.8%. 1.8% historical probability that we would not break the IB high or the low in the ES. The IB high or the low. And we had a weak high and we had a local double bottom, and it just could not take either. In addition to that, if I turn on the profile stats, it's obscured, but you'll see it only traded like 649,000 contracts, something like that, or 640,000. There it is, 640,000 contracts. That is about 40 to 46% off of the volume expected for the RTH session on any given day. Okay, so the volume yesterday was way off. It seemed like a holiday to me, other than the initial move. So what we had is OTF, the higher time frame, participate on the open. There were buyers. It was initiative action, meaning we closed Friday, we gapped up, and we moved away from the gap. We did not close the gap in the first hour, so the probability of closing this gap drops dramatically. So it was long, and get long, and stay long. That's what it looked like. But overall, you would have sat in a 5-point loser, 5 points of heat for almost the entire session, getting long the mid, or 4 points or something like that. The entire range yesterday was like 9.5 points. This is what summer trading looks like. A little early. It just seemed like the market was waiting for a move, and didn't have the volume, didn't have the range, didn't have any action at all. Just a bunch of HFT machines beating each other up. So overall, it's very poor action. If you look at your order flow, if we look at yesterday's order flow, let's go back in time with our little time machine here. So scrolling back. That's the long I attempted. Came all the way back and just ended up with 4 ticks per contract. But if you look at the action, lots of bursts. A burst up joined with a burst down, then a burst up, then a 1030 here. All times are central, and it just was bursting up and down, Really not very directional. The depth The depth was very thin yesterday, was throughout the day with big lumps here and there skewing the heat map. But overall, just a tough trade in my opinion. So that's where we ended up. So we ended up with a pretty Gaussian profile with an upward skew. We ended up with a pretty sharp point of control on the close. And the way this is set up is for a higher high. And so we got the higher high overnight, 2751.75. 2752.75 is closes the gap. The high yesterday, this high right here, is the gap mid. So if I turn on the flex levels again, stretch this out, these master levels. If we look at the gap zone from the 19th of March, the high yesterday was the gap mid, almost on the dot. The gap mid is 27.49. It went to 27.49 and a quarter, and it just couldn't get any further up. And so the overnight takes us into a further high. We end up expending the energy that was pent up at the high yesterday upwards, and since then we've been pretty much nowhere. We've gone sideways on the reopen. The Asian session was completely dull. The open of the European session was pretty dull. And then we had a bunch of PMI numbers, or I think it was CPI or PMI numbers. Yeah, PMI numbers out of Europe. And we get a PMI in the U.S., services PMI final for May, 15 minutes after the cash open today. And then we get ISM non-manufacturing at 10 Eastern, and we get the JOLTS numbers, and then a bunch of speakers today. So there's just not much to do anything with in terms of what's on the calendar. And then the way this shaped up, the overnight profile shaped up, it's pretty much 50-50. The overnight inventory in terms of what we've done is about 50-50. It really is flat. The overnight inventory is flat. We managed to push up and get that high in. There's still some room to close the gap. But overall, the market's trading both ways. If it continues to do so today, remember, we came in from a gap yesterday and just did not drive. We held the gap, but we didn't drive away from it, despite all indications early on that it would, that it's likely to. And so this morning, what am I looking at? I'm looking at this morning, I'm looking at a market that's opening in value, in range in value, and the value is valid. I'm looking at a choppy open, an open auction, and any failure to sell through and push through this 42.50 area, any failure is likely to be bought, and we're likely to get to that 52.75 finally with an overnight high breach, and then get this 27.54, which is my key target, my key initial target. So today's scenario is the same as yesterday's on scenario 1. Given how we're set up, I don't see how the other scenarios the sell scenario is more likely. It might work out that way. The alternative is an open auction that pushes through the high, takes out the weak high, gets resistance at 27.52 or so, and then starts to work itself through. I expect it to bounce at the value low, consolidate, continue lower, and potentially get into the gap below. I'll add this gap zone before the market opens, but that's how scenario 2 is lining up. Yesterday was a complete balance after the open. We're likely to balance some more today. Not seeing a huge catalyst, but if it does run, the targets above us, 27.54, 27.58, 27.60. And then if it runs below, then it's the gap close, 27.37, 27.33, and back to 27.29. Not expecting all that much range. Get used to the summer trade at this point. Before I let you go, I want to remind you, Thursday, I'm doing a public AMA at 4:30 Eastern after the market, 15 minutes after the pit closes. The link is in the video description. It's also up here, ft71.com/June 2018 AMA. Register. My promise to you is that your information is never sold and you're not going to be spammed with some sort of stuff. Or you can go to Futures Trader 71 and see the notice at the top. But join in if you have questions. If you're not a part of Convergent, this is an opportunity for us to talk and just have a conversation about whatever it is you want to ask. And I'm making myself available for an hour, and hopefully we'll get some participation. Good luck, and I'll catch you tomorrow morning. Take care.